Hey YouTube. Today, we are going to understand the 6 golden rules of Warren Buffett. These rules made him the best investor in the whole world. Buffett is a legendary value investor. Known as the Oracle of Bahama. He is the world's most successful investor. Chairman and CEO of Berkshire Hathaway, and he amassed a personal fortune in excess of $100 billion. Warren Buffett, never concerned with the supply and demand intricacies of the stock market. Investors like Buffett trust that the market will eventually favor quality stocks that were undervalued for a certain time. Buffett always used simple methods. And he always invests in simple businesses that aren't too complicated to understand. He always looks for the intrinsic value of a stock. This simply means the actual worth of the stock at that point of time. To determine that, he follows some golden rules. Let's understand the 6 golden rules of Buffett's investment. Number 1. Company performance. Rate of equity, ROE. It reveals the rate at which shareholders earn income on their shares. The investor should view the ROE from the past 5 to 10 years to analyze historical performance. Number 2. Company debt. Debt to equity ratio, DOE. Prefer a small amount of debt, so that earnings growth is being generated from shareholders' equity, as opposed to borrowed money. A high debt level compared to equity can result in volatile earnings and large interest. Number 3. Profit margin. A company's profitability depends not only on having a good profit margin, but also on consistently increasing it. Increasing margins mean management has been extremely efficient and successful at controlling expenses. Number 4. Is the company public? Consider companies that have been around for at least 10 years. Never underestimate the value of historical performance. This demonstrates the company's ability, or inability, to increase shareholder value. Number 5. Commodity reliance. If the company does not offer anything different from another firm within the same industry, set the company little apart. Characteristic that is hard to replicate is what Buffett calls a company's economic moat, or competitive advantage. Number 6. Is it cheap? An investor must determine a company's intrinsic value by analyzing a number of business fundamentals, including earnings, revenues, and assets. Finding companies that meet the other 5 criteria is one thing, but determining whether they are undervalued, it is the most difficult part of value investing. Warren Buffett's investing style reflects a practical, down-to-earth attitude. This made him the legendary and the world's most successful investor. Keep following, and we will help you keep growing. Happy investing! If you like the video, don't forget to like and subscribe.